we're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. You're watching Indian Open and I'm Shah. Good morning, Ida.
Good morning, Neeraj, and a very good morning to all of our viewers. Let's get you the headlines this morning. Asian stocks rise, tracking strong overnight cues from the US. The SGX Nifty indicates a positive start for India. The historic summit between North and South Korea kicks off. Kim Jong-un calls for a new history of peace and prosperity. Axis Bank reports its first ever quarterly loss since listing, provision spike. Reliance Industries set to report the highest revenue growth in 34 quarters. Jio expected to deliver another strong quarter as well. And Maruti Suzuki and UPL are the two other Nifty firms set to report earnings today.
Well, let's take a look at the trade setup for the day. The US markets, what they did and the resultant impact, if any, on the Asian markets. We're seeing a bit of a mild uptick that we could across the Asian bourses. The US markets did fairly well. Asia is a mixed picture, but mild uptick on most markets, and the SGX Nifty too, indicating a start that could be about 0.5% higher in trade. So taking off from where we left off yesterday, and I'm glad that I'm saying that because that positive close only came in due to activity in the last half an hour or 45 minutes of trade. I think the April series by itself showed that the Nifty can do well, sans the bank Nifty participation as well. A return of the old economy and the IT stocks, to be honest, the whole of the April series. And if you just look at the MRR from the start of the series of the 28th of March until yesterday, you will see that the top gainers had names like HUL, had all the IT names, ITC somewhere in the top 15 gainers as well. And save for Kotak Bank, no other bank. Yes Bank makes an appearance by virtue of the 10% up move today, but for the series at large, it was Kotak Bank which did that. So save for Kotak Bank, we didn't have too many banking names out there. In fact, SBI was amongst the top losers. ICICI Bank was very, very flat. So banks didn't participate, but the others did, which was a really good thing. And Yes Bank, actually, the results set off the buying spree in the Nifty Bank yesterday as well. So the last half an hour, 45 minutes was characterized by what happened to Yes Bank, yes, but what happened to some of the Nifty banking futures as well, and select other names like IndianOpen Bank, which did well. Can it last? Well, remains to be seen. Axis Bank, and that will have some bit of a reaction today. And I think from a perspective of today's session, Maruti, UPL, or Reliance Industries remains a key heavyweight since it comes out post-market hours. And after we've seen what happens to positive surprises to large companies, TCS was a case in point, Yes Bank a case in point. I doubt that there will be too many big positions that people will go into the results on Reliance Industries with. FIs continue to sell. Yesterday was a larger number, 1,065 or 1,056 crores, which is why pointing that out in today's trade. So what to watch out for? We'll dwell upon this a lot. Axis Bank, the stock likely to react to the quarter, but we'll talk about this more. I don't want to dwell too much on time on this. There are some other key numbers to watch out for. Very poor numbers or weak numbers, let me qualify it, by Axelia Kale. Rallis was disappointing. Essel Propack somehow failed to live up to its expectations in FY18. Quarter 4 wasn't completely good either. Likely that the stock might react a bit. Optically, Shriram City Union Finance seemed to be a decent quarter, at least on the bottom line front. Let's wait and watch if this reacts. IDBI Bank will be in focus, as would be Hawkins Cookers, because Equity India Fund has bought shares. The stock was up on 20% circuit yesterday. Interesting to see if this one continues to make a move in today's session as well or not.
All right, let's get you what's on first word. There will have to be a fair amount of focus on Axis Bank. How should we look at the numbers? Glass half full, that they have speeded up recognition, or glass half empty, that they had all of this recognition to do? We'll try and discuss that. Shraddha will come in. We'll also get a view in from Fitch Ratings. We'll move it to RIL then, talk about how they're likely to fare amid rising crude prices and how Jio will look this time around. The expectations for the fourth quarter coming up on first word, and life insurers are able to retain more clients. At least that's what the persistency ratios indicate. We compare the performance of the three listed players. I'm going to add one more to that. We will make a brief mention of the Essel case and IDBI, which actually is extremely worrying. But let's kick it off with Axis Bank. The numbers, the headline numbers you probably already know. First loss since they listed. large deterioration in terms of asset quality. They've gone from about 1% gross NPA to near 7% gross NPA. This is over the period of the asset quality review, showing how much of a pile of bad loans they were sitting on. Provisions more than 7,000 crore, and if you actually take out the tax write-back, the loss would have been even wider. But I'll leave it to Shraddha to detail the numbers first. Shraddha, what do they look like?
Well, yes, so first loss ever for this bank, and that has been blamed entirely majorly on RBI's new regulations that came out in February. So 2,189 is the kind of loss they posted, and hence provisions shot up to about 7,100 crores. And you'll see that if you move forward, the overall gross NPA number also saw a huge spike up. So that was an addition of as much as 9,200 crores just on a sequential basis to 34,000 crores. On an absolute basis also, the gross NPA number came in at about 6.77% as compared to about 5.3% that we had seen at the end of the third quarter. So big jump as far as provisions are concerned, the gross NPA is concerned. Now let's talk about the more scarier numbers, which are the slippages that came in at 16,500 crores for the quarter. A huge jump from 4,000 odd crores that we had seen in the third quarter itself. In fact, the bank did say that a majority of those slippages came in from the corporate books. Out of those 16,500 crore odd number, about 13,900 crores came in from the corporate book itself. In fact, the management also said that a majority of this stress was coming from the power sector, and in fact as much as 40% of the power sector loans are now NPAs. That was the word that came in from the management. Highlights the stress that all these talks around the power sector that we have been seeing of late. With respect to the corporate slippages, about 90% came from the disclosed BB and below rated book itself, is what they have said. So basically, it just highlights that probably those two AQRs that were done by the RBI were not enough, and they had to come out with this sort of a scheme where they had to scrap or withdraw all the restructuring schemes because you don't know what kind of these bad loans were sitting under the garb of various restructuring schemes. So that's what comes out of this. The watch list from which started from about 22,000 crores or so at the end of Q4 FY16 has now nearly been wound up at about 428 crores. So that will be merged with the overall book and will not exist anymore. BB and below rated portfolio has now reduced to about 8,900 crores, and the overall outstanding standard restructured book is now about 2,065 crores as compared to a number of about 6,000 crores in the last quarter. So that's the picture as far as where some of these bad loans stand. That apart, the guidance that they gave for FY19, they said that the NPA recognition phase is nearly complete, something that they've been saying for a very long time now. They're expecting credit growth in high teens, and they've also said that with respect to the margins, they should remain more or less steady at the kind of FY18 numbers that we have seen. Credit costs, they've said, will start to normalize from the second half of FY19. And the last bit that they've said that they expect the ROE to go back to that 18% levels, but analysts believe that they'll be able to do ROEs of about 15% or so by FY20. So that's in terms of the bank's overall guidance. So broadly, the key takeaways are it is a bad quarter, but NPA recognition was accelerated during the quarter. And I think on the back of this, clearly the stock is going to open about 2-3% lower. Based on how the GDRs closed yesterday, we will also be keeping an eye on ICICI Bank to see how it reacts, because they are also going to be materially impacted by that RBI circular. And lastly, just one point that I want to mention, that probably because of the kind of numbers that we've seen coming in from Axis Bank, you could see that the valuation gap between those private retail banks and corporate retail banks could only widen from here onwards.
Right. Shraddha, thanks so much for that. We will mention what brokerages have been saying, but I just want to go across to Saswata Guha, who's been with us on the phone line from Fitch to understand how he sees this. Good morning, Saswata. Thanks so much for taking our call. How do you see it? I mean, I know I've seen some analyst reports this morning saying that, look, they front-loaded it, so that's a good thing. And yes, it is a good thing, but, it is a bad thing that all of this existed. And actually, there is still some stress remain in the bank's books.
Hi, good morning. Well, I mean, I'm not sure how much they front-loaded it. Of course, if you sort of distill the quarter performance, I would not go, I would not repeat what Ira has already sort of laid out. But I think at a very high level, if you see, I mean, clearly this quarter has been driven by two basic factors. One, of course, is the catch-up provisioning, which is essentially loans where RBI had serious differences with the bank and which were forced to be classified as NPLs, and that was the backlog. And two, the second one is most recent RBI circular, which saw a fairly large restructured loans slip into NPLs, and obviously that invited provisions of its own. Clearly, I think we obviously have had certain assumptions or are going with certain assumptions on the NPLs, and we believe that this is not yet the end of it. More there. Although, the quarterly loss clearly was a surprise to us in the sense that while we did expect the full year earnings to come, to decline quite substantially, which it did, what we did not expect was a quarterly loss. And in my view, the reason why there has been one is because, some of these provisions, which arguably could have been smoothened over the quarters had some of these assets been recognized around the time when those divergences came out, then the impact would not have been so severe as we had seen in this recent most quarter. So I think on balance, it's not necessarily a performance which is, out of our expectations, but clearly the loss and such a large one at that has certainly surprised us to a certain extent.
Saswata, just a couple of points of note for the broader industry as well. They didn't give a number, but they said a material amount of the slippages are on account of the RBI's new circular. So then one should expect a similar, well, not similar quantum, but certainly a similar trend across the larger corporate banks?
Oh, yes, and which is... the point I was trying to sort of emphasize that, what we've seen in case of Axis is it will not be isolated simply to Axis. We expect many banks, in fact, to report losses, certainly for the quarter and who knows, perhaps for the full year as well, on account of both catch-up provisions as well as these new norms from the RBI, which basically means that, whatever was there existing with banks under the restructured book, a large part of that, we are going with the assumption of at least 50 to 60% of that book will now slip into NPLs and invite provisions in excess of 40%.
And Saswata, the other thing that was notable to me in the press conference, they mentioned that from their power sector exposure, I think the incidence of bad loans or NPAs is almost 40%. I mean, I know the 40% number is also true of, the contribution to slippages this quarter coming from power sector. But overall power sector loans, 40% of them have turned bad, which, gets us to that one residual part of the bad loan recognition process which was pending, which is power. Again, that's going to hurt across the industry.
Yes, that is true. And, as we've always said, I mean, power was always that elephant in the room. And it is pertinent not just from the perspective of potential NPLs, but mind you, I mean, these assets will now go into resolution. And yes, we have been hearing a lot around the first 12 accounts, but let's not forget, large part of those accounts are still, we still don't know how resolution will play out in the power sector, which we think will be a lot more difficult. And quite frankly, while I do not while I do think that resolution will happen, but it will come at the cost of significant haircuts. And you're right that power will continue to be a pain point for the sector as a whole.
Saswata, thank you so much. Appreciate your early morning call to give us a sense of what's happening. Neeraj, as we throw it back to Shraddha for some brokerage views, I mean, I was looking out for what Ashish Gupta of Credit Suisse says. He says there's still residual stress of about 3% of loans left on the Axis Bank book. So, I know a lot of people are saying front-loaded, but I don't think that's something that you can hold on to, grasp on to.
Yeah, and I think a lot of private investors would be willing. How do we trust that this is the end of it? The fresh loan formation, I believe, still stays high. But anyway, Shraddha, that's limited view. What have brokerages by and large said?
Just like Shashwata said, the overall tone from the brokerages does not seem negative for some reason. They've maintained the ratings that they had, but there are clearly some target price cuts that have come in. So all of these brokerages have actually reduced their target price, with IDFC taking the biggest cut of about as much as 20% in their prices. 2 or 3 key reasons. What they're trying to say is that the bank is not going to fail with respect to capital adequacy. They are well placed, especially once you will have that warrant conversion coming in, which will aid that tier 1 capital ratio. Secondly, they believe that business momentum growth will continue because the retail assets continue to do well. And the third bit is about valuations. They say that at about 1.7, 1.8 times forward price to book value, the stock price is not very demanding. So those are their 3 reasons for maintaining that rating. But yes, earnings have been cut, and hence that has been reflected in cutting that target prices.
All right, Shraddha, thanks so much for that. Axis Bank, we'll watch the reaction. I just want to mention, I know you mentioned IDBI Bank. This Essel case is a little bit of a can of worms. The amount is 600 crore, and I think CBI yesterday came out with a long list of people they have booked, including the Essel promoter. Why it's worrying to me, and there are some 15 former and current IDBI officials, but why it's worrying to me is that there are 2 current sitting bank chiefs who have also been booked. Mr. Rego, who is currently heading Syndicate Bank, and Kishore Kharath, who is currently the head of Indian Bank. It's worrying. These are 2 sitting bank chiefs. I don't know what the government is intending to do about this. I know that the CBI has only booked them yet, but one assumes there is some reason to see suspicion, and hence this has happened. So I don't know how this is going to play out. Former officials, yes, but what about the 2 sitting bank chiefs?
Yeah, and it's something that we haven't really kind of seen in the past as yet.
Not sitting bank chiefs,
not
right?
sitting
I mean, except in I think that the Bhushan case a few years back. That was a while back. But in this current series of cases that we have been seeing, these 2 are the 2 sitting bank chiefs to my mind whose names have come. I think Arun Kaul's name had come, but he's moved out.
He moved out.
So I'm not sure what the government is going to do about these appointments.
Well, this is interesting, and the scene only gets, for lack of a better word, murkier. But yeah, it's a potential can of worms, as Ira was saying. Well, watch out. It's not turned out to be a particularly pleasant morning for banks, though yesterday was a reasonably good day from a listed bourse's perspective. Can it turn out to be a pleasant quarter for the oil and gas space, upstream in particular, and Reliance Industries will be the poster boy? It's expected to post a strong set of numbers for the 4th quarter. Sumit joins in to tell us what to expect. Sumit, good morning.
Good morning, Neeraj. So if you see the headline numbers for Reliance Industries, its revenue is expected to rise 23% to 89,700 crore rupees. Now, this will be the highest revenue growth that the company will see in the last 34 quarters, mainly because of higher crude oil prices in the 4th quarter of financial year 2018. On the operational front, the EBITDA is expected to rise by 9%, while the margins are expected to decline by around 200 basis points to 16.7% in the 4th quarter of financial year 2018. On the bottom line front, the net profit is expected to rise by around 6% to 8,900 crore rupees, and this will be the 8th consecutive quarter where the company will see an expansion in its net profit. Now, gross refining margin, that is the key number for the standalone refining business of Reliance Industries. It is expected to come at around $11.2 per barrel. Now, this is coming off a bit compared to the last quarter, mainly because of the decline in the Asian benchmark, that is this Singapore gross refining margin. Now, that averaged around $7 per barrel in the 4th quarter of financial year 2018. Now, Reliance Industries premium to the Singapore GRM is also expected to come off a bit to around $4 per barrel. Now, because of this weaker refining margins and lower volumes, the refining segment of Reliance Industries is expected to be a bit soft. However, the petchem business segment is expected to report a strong set of numbers in this quarter, mainly because the segment will benefit from because of the ramping up of its new capacities, higher spreads, and because of strong volume growth that the segment will see in the 4th quarter of financial year 2018. Now, the E&P segment, that is the exploration segment, is expected to report higher losses because of lower volumes. However, some of it will be offset because of the higher crude and gas prices that we had seen in the 4th quarter of financial year 2018. Lastly, the consolidated numbers of Reliance Industries will boost because of the Reliance Jio numbers, which are expected to come in good in the 4th quarter of financial year 2018.
The TRI data for the month of February, Sumit, showed strong customer additions by Reliance Jio as well. Is that expected to translate into numbers?
Well, yes, because of strong subscriber additions and because of higher Prime membership fees, the revenue of Reliance Jio is expected to rise by 6% to 7,263 crore rupees in the fourth quarter of financial year 2018. On the operational front, the EBITDA is expected to rise by 5%, while margins are expected to remain more or less stable at close to 38% in the fourth quarter. Net profit is expected to rise 16% to 584 crore rupees. Now, ARPU, that is the average revenue per user, is expected to come off a bit in the fourth quarter because of the tariff cuts that we had seen in the start of the quarter. Now, ARPU is expected to come in at 140 rupees, which is a 9% decline compared to last quarter, where the company had reported 154 rupees average revenue per user. Now, key things to watch out for would include the contribution of Prime membership to the total revenue of Reliance Jio. Now, this will be important because this will not only boost the revenue but also the average revenue per user of the company. And other than this, management commentary on the tariff changes that they have planned for the financial year 2019. Along with that, their capex plan, that is the capital expenditure plan for financial year 2019 when it comes to Reliance Jio. Updates on commercial launch of the broadband business and the DTH business of Reliance Jio, and lastly, the update on the timeline of completion of the recent acquisition that the company had made of the assets of Reliance Communications. So that will be the key things to watch out for in Reliance Industries earnings.
Okay, Sumit, we'll watch out for that. Thanks a lot for putting that into perspective. A last piece on First Word today. The three life insurers have all reported their earnings. And the reason I bring it up is because the stocks have been very, very active. ICICI approved for the 2 days before yesterday. Yesterday, HDFC Life locked in about a 4% gain. Then SBI Life came out with numbers as well. Just thought we'll compare what each of these three did for the quarter four. And then just one or two basic parameters. There are some 5 or 6 parameters with which you can compare and value insurance firms. I've just used one or two. Firstly, the quarters. So HDFC Life, the Q4 net premium income was up about 24%. Their PAT was up about 40%. And the problem, or the small chink in the armor that I thought for the most expensive of the life insurers, was that the 61st month persistency ratio at the end of quarter four came at, or for quarter four, came at 47.6% versus 56.6%. So it did dwindle a bit. Now compare that to ICICI Pru and SBI Life. 61st month persistency ratio for ICICI Pru was at 54%. It actually went up from 53%. And for SBI Life, it came off, but still at 58.57% at the end of quarter four. 13-month numbers for all have actually improved from where they were, which is actually which is not a bad sign. All three of them have improved the 13th month persistency ratio. The 61st one was a problem. Just getting back to ICICI Pru, their quarter was reasonably solid. The Q1 PAT was down, but the net premium income improved quite a bit. The margins improved much better for ICICI Pru, and that was a highlight. And for SBI Life, the numbers that came out yesterday, net premium income up, PAT numbers up. It was by and large a decent quarter on the reported front for all three, save for one chinks here and there. And then what happens to valuations? Remember, for SBI Life, their persistency ratio for 61st month came off a little bit from the highs because a high proportion of single premium policies came out of the lock-in period. However, what do each of these individually trade? And one key highlight from each of these. So HDFC Life, the key positive was the 120 basis points expansion in the VNB margins. They went up to 23%, industry leading, and people believe that plus the high return on embedded value of about 22% for HDFC Life makes it deserving of the premium valuations that it is at. It's double of SBI Life and slightly more than double of ICICI Pru. But a lot of people believe it's justified. It was evident in the way the stock did yesterday as well. It went up after such a fabulous show by ICICI Pru in the quarter. ICICI Pru, people believe that the VNB growth is likely to be the strongest because of the high margin savings products as well, and the return on embedded value could actually move up to 18% over the next 3 years from the current 14-15 odd percent. It's valued attractively, 2.4 times FY20 expected embedded value. And SBI Life, it's trading at about 2.9. Most people believe that the gain in market share should augur well. So if you look at across the spectrum, the views are quite clear out there. HDFC Life, the most expensive, but people like owning it. ICICI Pru, the cheapest. People don't like owning it as much, just that this quarter changed the things a little bit. Across the board, people like SBI Life for a variety of reasons. and it's slowly gaining in market share as well as in valuations over the others. Let's see if that continues.
All right, that's insurance. So those are our top stories, editorial picks here on the show. We will, of course, talk a little bit more about the trading session that comes up after a quick turnaround, and then go on from there to get some market views later in the show as well.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.
Funding का चक्कर.
It is so frustrating. I feel like banging my head against the wall.
No, don't bang your head. Cross the bridge instead.
Bridge?
हाँ, ये देख. ला.
अरे.
This bridge gets you in touch with interested investors. Funding happens, which means more outlets, more customers.
Interesting. And what exactly is this bridge?
A stock exchange created for your kind of company. Just list on it and help your business expand.
Really?
Yeah.
तो फिर लिस्ट कर लूं?
और क्या? शुभ काम में देर किस बात की? चल.
हाँ.
NSE Emerge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
Welcome back. You're watching Indian Open with us on Bloomberg Quint. Let's do a check as to how the Asian markets are faring this morning. Well, it's looking like a good start to this Friday morning. Nikkei is trading with gains of 94 points. Hang Seng, Shanghai, both these indices. Hang Seng is actually quite flattish right now, but Hang Seng has seen gains of nearly 0.5% coming about. And for SGX Nifty, that's suggesting an opening around the levels of 10,650. Let's see if we have a gap up opening in today's trading session or not, but today is the day one of the May series as well. So let's head across to Agam Vakil to find out what sort of cues are we getting on day one. Good morning, Agam. How are we stacking up today?
Good morning, Navneet. Well, positive cues coming in, especially if you consider the way rollovers have panned out. When it comes to the Nifty, at around 72%, largely in line with the previous 3-month average. When it comes to the Nifty Bank, however, it's slightly above the previous 3-month average. So more traders out there are willing to take their positions and carry the positions forward to the next series. That said, when it comes to the volatility index, as one might expect, it's fallen to a certain extent now, edging back towards the mark of 12. However, we've also seen, rearrangement of the Nifty put call ratio after the expiry, so that currently stands around 1.48. In terms of changes in OI, what we really saw was a little more writing with respect to the 10,600 put, and unwinding in the 10,600 call as well. But when it comes to maximum open interest distribution, what we are looking at is All right. Okay. So in terms of maximum open interest distribution, we are looking at a 200-point range between the 10,500 and the 10,600. That said, in terms of the big movers, we have DCB Bank, which moved in, and we saw longs building in there. On the losing end, however, we saw a lot of weakness in Marico, and we did see rollovers coming in towards the short side ahead of its earnings next week. And PC Jeweler continued to extend losses, and even though it did recover a lot of its intraday losses, it still ended the day with cuts of around 3% and rollover standing at around 86%. So a lot of this were towards the short side. So we'll be watching out for these as well as we move into today's day of trade, Navneet.
Thanks a lot, Agam, for bringing those F&O cues for today's session. Well, the setup, if you look at it, at the start of the April series, FIs were actually net short on the index futures. But for this series, actually, they've been net long on the index futures. But remains to be seen whether the range that we're looking at for May series, if you look at the maximum OI concentration, it is at that 11,000 call strike to about 10,500 strike. And clearly, we've surpassed that resistance mark of 10,600, which a lot of analysts in the street have been talking about. And remember, the next key level to be watched out on Nifty will be somewhere about 10,700. But there will be key earnings reaction definitely, Neeraj, in today's session from the likes of numbers that we saw from Axis Bank.
Yeah, so Axis for sure, and we established that in first word. You wouldn't be surprised if you see a downtick there. The interesting bit would be what happens to the Nifty Bank in light of the buying that we saw yesterday because of the Yes Bank numbers. So whether, and Yes Bank has seen some upgrades across the board, but whether Yes Bank and some of the others can propel the momentum that we got yesterday in the Nifty Bank versus the disappointment that comes in because of Axis Bank. I would reckon IDBI Bank too could be in the eye of the storm in today's session. So let's wait and watch what happens to that one as well.
So a lot of price target cuts have been seen for Axis Bank this time
not
around. Let's see, with the higher provisions, is all the negative news now priced in for that bank or not? But
the other thing would be, Navneet, one is what happens to banks. Second is what happens to FMCG, right? HUL, ITC, we were discussing this yesterday as well for the series, have been principal contributors. HUL more so, not so much ITC. But
Nestle was up yesterday. We've been discussing Nestle on this show. We did have a chat with Sanjay Manyal too of ICICI, and clearly I think we've been talking about this counter a lot, the kind of takeaways that we got from their annual report, the volume growth. Let's see if they can repeat the sort of volume growth, at least from HUL, that we got to see in the December quarter. That's going to be a key metric to be watched out for all these companies, majority of them at least. Yeah, I mean, so Nestle individually, but HUL and ITC from an index perspective, if they continue to perform, for sure, I think that's a pocket to watch out for in a meaningful way. Can the valuations expand from where they are right now? They are already very expensive, but let's tell you which other stocks that will be in focus in today's trading session. There were key earnings which came out post-market hours, and some Nifty constituents, they will be coming out with their earnings today from the likes of Maruti. Let's head across to our research team to get more details on the same. Good morning to all of you. Shraddha, I'll come to you first. What are the stocks that you're tracking?
Navneet, Cyient, which has acquired a semiconductor firm in an all-cash deal worth $17 million, that's close to 110 crores. Thermax on the back of an order win of about 280 crores. That's a very small order for the company, but let's see if we see some positive reaction there. Indian Energy Exchange, where the board has decided not to go ahead with the buyback, so that could weigh on the stock. Fortis, of course, will continue to remain in focus. They will further discuss board restructuring in a board meeting today. Interesting bulk deals. Hawkins Cookers is one where Purinju Velia's equity intelligence, two of his funds have actually together picked up about 1.6% stake in the company via bulk deals, so total investment of about 24-25 crores that they've made. Coffee Day, where Marina West Singapore has sold 0.6% stake, and then you have Karnataka Bank, where Copthall Mauritius Investment has sold 0.7% stake. They held about 5.5 as of December, so partial stake sale. So some reaction there likely to be seen. All right, we'll watch out for all those stocks. But Nikki, some earnings post-market hours?
Yeah, a couple of them actually, to begin with Biocon, in line with estimates number that we're looking at. If you look at the revenue growth, that's almost a 26% uptick there, in line with estimates, and net profit is up as much as 2%. That's on account of the finance cost, which has jumped as much as 3 times, thereby weighing on the bottom line performance of the company. If you look at the EBITDA, it's bang in line with what we were estimating, a 24% growth at a number of 232 crore, as compared to an estimate of roughly 233 crore as per Bloomberg estimates. Reliance India, that is a weak show show there. The company has reported revenue as much as 7% up, a muted growth on top line. Net profit has come down for this company at 36%. That's a count of disappointing show that we've seen on the operational front of this company. Look at the EBITDA numbers. They're down as much as 21% at a number of 33 crore as compared to 42 crore. In effect, to which you're also seeing the margins contracting. Higher raw material cost along with your other expenses have weighed down on the operational performance of the company. Third bit that we're tracking is Tata Metallics. Decent show on operational front for this company. However, the margins have contracted a little bit for this counter. A basic rundown, revenue up by 36%, net profit is up by as much as 38%, EBITDA is up by 18%, and the margins have contracted to 16% as compared to nearly 19% in the corresponding quarter. Shriram City Union, not a good set of number coming in from the company. Net interest income, although has risen by 14%, but then the NPAs have risen. That's mainly on account of the company migrating to 90-day loan recognition norm from the earlier 120 days provision that was earlier. IEX, as Shraddha mentioned, we're expecting a negative reaction on the counter, not because the board has decided to go back with the buyback plan, but then if you look at the results of the company, decent show there. EBITDA is up by as much as 23%, while the margins have shot up to 78% as compared to 69% in the corresponding year.
All right, so a whole host of earnings reaction we'll see post the market opens today, but healthy set of numbers from Maruti expected.
Yeah, clearly, Navneet, and the volume growth for the quarter was quite strong. In fact, we saw 11% volume growth coming in for Maruti Suzuki in the fourth quarter. If you look at the revenues, we're expecting a 14% jump. Of course, this will be coupled, with the fact that there was volume growth, and a 2 to 3% realization growth is what we are expecting. Remember, in the start of January, Maruti Suzuki hiked prices for the products, and because of that, we could see some good improvement in the overall margins sequentially. Margins seen at 15.6% for the auto major, and profits also seen growing by nearly 22% for Maruti Suzuki. Of course, apart from the earnings, the key issues to watch out for will be the further details on the collaboration with Toyota with respect to the parent Suzuki. What exactly is the plan for the India distribution? Also, we'll talk about the update on the royalty reduction proposal which Maruti Suzuki sought with its parent Suzuki. Of course, Suzuki board was supposed to approve the plan, and there is still no word from the management. So something on that is something that we'll be watching out for. And apart from that, the new launches and the demand trends is something important we'll be watching out for, apart from the management commentary on the
What
earnings.
time do the numbers come today?
Probably around 1:30 is what we are expecting for Maruti to come out with the earnings.
Okay, we'll watch out for those numbers. Thank you so much, all three of you. I think we've got Yogesh Mehta of Motilal Oswal joining us on the show now. Hi Yogesh, good morning, and thanks a lot for joining us today on Bloomberg Quinn. Well, all eyes will be on how Axis Bank reacts to its earnings, and clearly Yes Bank surprised positively yesterday with regard to asset quality improvement, and Axis Bank surprised with higher provisions that were seen for this quarter. What did you make of these numbers?
Yeah, good morning. Axis Bank and Yes Bank are in order A to Y, but this time the result shows that Y is first and A is later in the descending order. So Yes Bank has given a fantastic set of number in all the aspects, wherein in terms of NPA number, the asset quality is better, and NI growth is also very much significantly higher. So all this put together seems that Yes Bank on the valuation front, it could be a comeback story again. And if this remains, hangover was there on a write-off of misreporting last financial year, that I mean to 16-17. So that is now put back. So we believe that now all the concerns for Yes Bank is far behind, and again it will be into the limelight with the growth back on track. And the focus on the corporate as well as the retail lending, both are showing good traction, and we believe that upside momentum will continue further in the next forthcoming quarters also. So we are quite bullish on that. On the contrary, Axis Bank again, post Bain Capital investment, it was looking like that a bank will grow its book and loan book will be in a better shape. But this time again, the provisions and NPA growth of gross NPA and the NPA level is inching up higher than what we expected. So that seems on a disappointment side on Axis Bank. However, we are cutting our estimate on that front because it seems that the growth trajectory for this bank will remain a laggard, maybe in the last quarter or the second, at the best second half of FY19. Before that, the growth trajectory seems to be on a back to normalcy. So we are taking a stance on a neutral basis. However, stock may open up with the downside opening, and but it would not be prudent enough to buy from those levels.
So Yogesh, we now have about 4 private banks that have come out with numbers. ICICI Bank remains the big one to watch out for. Actually, even a couple of smaller ones have come out. What would be a good bank to invest into? Because the HDFC banks of the world remain very, very expensive, and they have only become more expensive in the last couple of months, and Axis continues to disappoint.
Neeraj, when we are talking about the top 4 banks which have come out with the results, then earlier also in my conversation with you on IndianOpen Bank, that the growth trajectory for this company, this bank is just a phenomenon. The growth rate is equally 20-22% growth rate since last so many years. So that track record plus the book and the growth, both are showing a very good sign for future prospect. So anybody who have missed out with HDFC Bank, and it seems to be expensive one, though it will remain expensive with the premium valuation because of the credibility of the management and the track record and the history that they have delivered the growth in terms of 56, 57 quarters of 30% growth, and now it is 22-23%. So then also it seems that it will remain that premium, and it's a darling stock of FIs. But IndianOpen Bank is again one can look at further from here with 3.6 times price to book. It is available at a bit lower than that, but the growth trajectory shows that the premium is justified. So there on the large cap side, we would recommend IndianOpen Bank, those who have missed on HDFC Bank.
Which was talking about HDFC Bank as being the darling of the FIIs and getting in about 30% growth for the past so many quarters, and now about 22. But they believe IndianOpen Bank could be a good one to bank upon. Okay, Yogesh, the other pack of stocks which have set the stage on fire are the mid-cap IT names. It's not a new thing. The last 7 or 8 odd months we've had that. But the momentum just continues unabated. Mindtree yet again piled in 3.5%. Cyient was up about 3.5%. NIT Tech 1149. These are unprecedented levels. What have you guys been advising your clients to do now? If somebody bought into mid-cap IT 3, 4, 5, 6 months ago, is sitting on some handy gains as well, should that investment continue?
Yes, Neeraj, on mid-cap IT, Mindtree post-result, again we review our rating on that, but again it is 21, 22 times. But the way US is growing, those who are US focused IT companies, when the growth and the spending on the IT discretionary spending is growing, that shows some more confidence, poised more confidence into the company's prospects for the next financial year as well. So that's why we are remaining invested to them. We are not suggesting or advising to booking profits out of that. The names are specifically into Mindtree, Cyient, and etc. Not the NIT Tech, because there we have not that comfort, and the price has run ahead of in very short span of time. Maybe a 1 year it was 350 odd to now 1150. But there we have Mindtree and Cyient. These are the stock, the companies where we still advising to remain invested. So these are the 2 names where we would be continue holding that.
Well, IT clearly has had a stellar run-up this year, and Neeraj, if you remember, we were talking about how a month back or a month and a half back, there were these newspaper reports suggesting a couple of these hedge funds were buying domestic IT companies by way of ADR in the US markets, and the reason for that was how there has been some sort of improvement in the US economy, on back of which they were betting on these domestic IT companies back home. Yogesh, what else is looking good to you? Let's say if somebody wants to play the rural theme now, the forecast for monsoon has come in as normal. How would you go and play the rural theme? Because we've seen a lot of stocks from the consumption space also rallying in the recent past.
If now this would be a right time to play on a monsoon, given IMD has forecasted 97% normal monsoon for the 3rd consecutive year. So that would be a good opportunity for, again, on a rural consumption theme to play, wherein we are looking at least on a consumer space, Dabur and Britannia looks very strong. Even ITC can be considered there. On discretionary spending, two-wheeler space, Hero Moto, and on the tractor side, we believe that that can drive further momentum. and the growth can be scaled up from here. This would be the peak season for them on the sales side, May and June. So there, Mahindra & Mahindra could be a very good play on defensive one. And apart from that, on affordable housing, names are also very are available right now with attractive valuation. There we are recommending few names. And on NBFC, Shriram Transport Finance, where vehicle financing on the that seems to be very promising, with hardly 2.4 times price to book, the cheapest available stock in the NBFC sector. So that seems to be very promising. We will have numbers again for Shriram Transport Finance. So post that we will again review that. But yes, we are bullish on this. So we are recommending all these stocks for playing consumption theme.
Dharmesh, Yogesh, the cable industries seems to be doing reasonably well. We also have a discussion lined up a bit later on with a company called CMI later on in the day today at about 2:15. But any thoughts on this whole space? And if you track any of these companies individually, what are your thoughts and why?
Neeraj, so far in cable segment, we had earlier Phenolics cable in this segment, and now we have dropped off this coverage since the last 1 year because of the valuation. But since still we are believing that B2B and B2C segment will be a very good opportunity to play here on, and the growth rate will be 15 to 17% CAGR over next 2-3 years because of the housing boom is taking place, and the unorganized to organized theme will also play well for them. Apart from that, Havells, which has migrated from them from a normal wire company to now appliances giant, so that would be a partial segment is there now. Wire segment has left, but appliances is doing well, and the electrical fans and lights and LED lights that are playing more on Havells. CMI per se, the company is doing well. This is my personal opinion. Company is doing well on that front. Have garnered a few good orders, and with the market cap and the sales number, both are providing a very lucrative opportunity. But so far we don't have coverage, so won't be able to comment anything at this point in time in CMI.
Yogesh, anything from the media pack that you guys like at Motilal Oswal? Because there are a lot of analysts on the street who are betting on the media stocks, considering this is a year where we're going to have multiple state elections.
Shraddha, every time whenever elections are there, we are always gung-ho about media, but nothing is really turning up, to be very frank and open. So that seems to be, that space is very much, regulatory hurdles are there, many capex oriented hurdles are also there. So putting all this together, it seems that maybe it could be a seasonal one. But for media space, we have coverage, however, on Dish TV and Sun TV and Z. So out of that, Sun seems to be a preferred one, where again, a Karnataka election will have a very much effect on that. So that needs to be in focus for the month of May series at least. And we have a buy rating on Z with sports channel have been encased, and Z5 and other digital content are playing. The new ventures are also having a very good traction. There we think that with the valuation multiple of 30 times, Z would be could be a one where one should look at.
Okay, Yogesh, stay on. So many results that have come out. Would want to discuss 2 or 3 of those with you as well. But Navneet, it's time to get into technicals now.
That's right, Neeraj. So let's get in Dharmesh Shah, Assistant Vice President for Technical Research at ICICI Securities, who joins us on the show now. Hi, Dharmesh. Good morning. Thanks a lot for joining us today on Bloomberg Quint. What's the approach on Nifty and Bank Nifty? SGX Nifty, however, today is suggesting a bit of gap up. It's also day 1 of the May series. Yesterday's rally in the last half an hour was probably got to do with the expiry day. But do you think the momentum continues to be on the upside?
Yeah, good morning, Navneet. Yeah, definitely, I think so. If you look at the momentum in the market, it's been very strong, and we believe, I think so, that after the 4 weeks of consecutive rally from 99.50, we believe, I think so, there could be some bit of a consolidation in the range of 10,700 to 10,400. As today Nifty has been opening about the key hurdle of 10,638, we believe, I think so, 10,700 will be more likely target, which is the upper band of the channel for the Nifty, is more likely the target for the day. But overall, I think so we're expecting, I think so, as we are moving closer to the Karnataka election in the month of May, we believe, I think so, the market may be into some bit of a consolidation ahead of the key event, as we have already seen 685 points of a rally and without any major correction. So we believe, I think so, market can be moving more of a base formation or more of a higher bottom in the range of 10,400 to 10,500. So we believe any dip from the current level should be looked as a good buying opportunity in the market. So overall, I think so the view remains to be more of a consolidation in the range of 10,700 on the higher side, on the lower side again 10,400 being a 38% retracement of the rally from 99.50 to 10,640. And also the last week low, if you look, is at around 10,398. So we believe, I think so, 10,400 will hold the market, and we expect that a buying should come around those levels. So buy on dip should be the strategy going forward as we are moving closer to the May Karnataka elections.
Dharmesh, very quickly, what about long positions on the Nifty Bank? Would you carry them on today?
Yeah, I think so. Bank Nifty, we believe, I think so, it is more of a stock specific action in the Bank Nifty. We believe, I think so, 24,500 to 24,600 being the range of 200-day moving average, which is at around 24,580, will be a strong support for the Bank Nifty. But as today, as we need to see how the Bank Nifty opens, but we believe, I think so, there should be a demand at around 24,800, 24,850. So I think so around 24,800, 850 again, I think so one should look for long positions around in Bank Nifty.
Okay, Bank Nifty is actually going to be in focus on back of how Axis Bank today reacts to its earnings. But Dharmesh, stay on with us. We'll come back to you for your individual stock ideas for the day. It's 8:50. On to our special segment, Bloomberg Edge, where Jayesh Kilnani tells us about a pattern that the Bloomberg terminal has thrown up on a stock. Hi Jayesh, good morning. What's on your radar today?
Hi Navneet, morning. So what I'm watching out for is the tire space and in particular Apollo Tyres. That is because as of yesterday's close, it has in fact breached above the 21-day exponential moving average, and the volume has also been more than what the 5-day average volume has been. That's the last 6-month chart of Apollo Tyres. First, let's have a look at how the exponential moving average actually works and what are the conditions that we have to watch out for. So it's the exponential moving average. How is it different from the simple moving average is that it applies more weight to the most recent data. So, because of this, what it does, it reacts faster to the recent price moves that we have seen. And also, it is suited for trending markets. So it gives you the direction in which the trend is, depending on the direction of, where the exponential moving average is pointing towards. So that gives you a sense of what the direction is for the stock. Now let's come to this chart of Apollo Tyres. That's the last 6-month chart. What you see over here is the green line is the 21-day exponential moving average, and you see that it has actually followed the trend. Whenever it crosses above, it tends to stay above, and when it crosses below, it actually tends to stay below. What has happened as of yesterday's close, you can see over here, the last candle has in fact closed above the green line, which means that a bullish signal has been generated. Why do I say bullish? Is because the stock price went up along with the volume actually going up, and it has actually crossed above the 5-day moving average. Historically, this has worked very well because if in the past you had followed this indicator, over the next 10 days, the net profit would be close to 6%.
All right, Jayesh, thanks a lot for bringing all those details with regard to Apollo Tyres and also which Bloomberg terminal. That's a pattern actually of exponential moving average that it has thrown up on Apollo Tyres this morning. Dharmesh, I'm going to come back to you with regard to your trading strategies for the day.
I think so. As we already seen, the hotel space has been the more exciting in the last few trading sessions. So we'd like to go with the more for positional calls in market, I think so, rather than going for the intraday trading. So I think so on the positional side, we like hotel space, and inside the hotel space, we like Royal Orchid Hotel, the one. There are many other hotels too, but I think so the structurally speaking, I think so the Royal Orchid, there is a structural change happening in the Royal Orchid. We have seen a more of a flag breakout happening in the Royal Orchid, and to talk for the long term, if you look, I think so technicals, we do give importance to faster retracement. And if you look for the chart of the Lower Orchid, I think the 12 weeks of fall has been taken out in the just 2 weeks. So it's clearly an indication of a strong demand and the faster retracement of the last leg of fall. So we believe, I think so, there's something structural change happening in, technically in Royal Orchid. So we believe a stock should be moving towards 259, keeping a stop loss of 205, being the last week low. Not a last week, but more of a base formation where we have seen is in the range of 205 to 210. So we believe, I think the 205 should be the stop loss for Royal Orchid, keeping a stop loss of 205 and a target of 259. The second stock which we like is on the mid cap IT space is a Majesco, the one where again a flag breakout, and if you look at the chart pattern, the price action has been captured in a very defined upward sloping channel. So we believe, I think so, the stock on the weekly chart also making higher high, higher low, and more likely a breakout about 603 will likely to hit the target towards 632. So we believe, I think so, Majesco, the one keeping a positional view or time frame of 1 month, we expect the target of 632, keeping a stop loss of around 515 for Majesco. So these are the two top picks from the positional side from our side.
Interesting. Some numbers, Yogesh, I want to come back to you. There were 2 or 3. Do you guys have coverage on Essel Propack, leader in its space, but the growth numbers haven't looked too impressive the last 3 or 4 quarters?
Neeraj, with Insti Research coverage arena, we don't have Essel Propack, so I won't be able to comment anything there.
Okay, fair call. Let's leave that out. What about the kind of moves that a stock like Ashok Leyland is making? If you have some thoughts here, that stock continues to rise and shine, and I know CVs are in a great space, but is Ashok Leyland a good play from these levels? And if not, is there another way to play the CV boom that we are likely to witness? Maybe auto ancillaries, maybe some other CV player?
Neeraj, with this, I would say Ashok Leyland, the company was not able to grow in last, say, till FY 15-16, and post that now they have turned around with the CV cycle turning up, and the numbers are also flowing month-on-month number when we track. So that shows a very good promising future for Ashok Leyland in CV segment per se. And they are very much ready with the new technology on the e-vehicle also. So that also they are garnering more traction with the new orders which may flow. Right now it is very minuscule, but at least that is showing that they are technology ready. And the CV cycle which is turning up, that is also posing great confidence. And with the valuation front right now at 164 rupees, if we see with FY 19 and 20 number, it seems to be that upside would be 10 to 15% on a fair valuation basis. But yet, as and when the numbers will unfold on a quarter-on-quarter basis, the result basis also. So we feel that yes, it could be a stock which can investor continue holding for next 1 or 2 years for better returns. And that cycle will remain there with normal monsoon and the demand with the GST implementation and all together. So favorable dynamics are playing all positive trigger for Ashok Leyland.
Yogesh, since we're on the topic of autos, we'll have Maruti Suzuki coming out with their quarterly numbers today, and it's expected to be a good quarter where we're looking at some bit of margin expansion of between 100 to 150 bips. What's your expectations from this one?
4.51 units they have sold in last quarter. So what we believe is the growth rate on the sales number is of course there, but margin expansion, as you said, it will be around 180 to 200 basis points for them. And what we need to watch out for is the management commentary for royalty payment and all. And EBITDA level and PAT level would be at around 28% growth rate on YOY as well as QOQ basis. We are expecting 2,300 crore of a profit for this quarter, and it was 1,800 crore for third quarter as well as the fourth quarter last year. So, overall, the new launches we need to watch out for. Attractive valuations are already there. The new launches with Desire, Brezza, Baleno have done wonderfully well and still doing very well with the new Desire now. So the growth prospect for this company is very much set, and still need to see what the commentary of the management is right now. So we believe that around the EPS growth would be around 20% for FY 19 and 20, and at 380, 450. EPS for FY20, we believe that still stock is very attractive.
Well, Yogesh, sorry, did I hear you say you expect profits of 2,300
yes.
crores?
Yeah.
Wow, this against 1710 odd crores would mean that, I mean, if that number turns out to be true, Navneet, the Bloomberg estimates, by the way, are 2,085. At 2,300 crores, that would mean a growth of about 35 odd percent, right? 35 odd percent, which would certainly surprise the street. It will be in line with Motilal estimates, but certainly surprise the street for sure.
Yeah, since this is the Bloomberg estimate, which takes the average of most of the brokerages, definitely then it's going to be above the street estimate. But Yogesh, just staying on with Maruti, since you said valuations do appear on the higher side, do you think it's a stock which is worth keeping in the portfolio still?
Right now, the murmuring is on a temporary headwind are there because the LME prices have gone up, so that may will rise their input cost. But I am sure that they will be able to pass on to the end customer. So this is just a temporary one. With the growing ROE ROC number, it seems that 15-17% growth rate on growth rate on the monthly vehicle sales. It shows that the growth prospects are very much in line and as per the expectation. So if investment is there and somebody who have not invested so far, they
Sure.
can continue and hold on for that.
Okay, so Yogesh suggests to hold on, but the pre-opening rates will just come up on your screen. As you can see, SGX Nifty is suggesting a gap-up opening, but remember, it has come off. So the initial rates are showing a downtick of nearly 23 to 30 points. It's just flattened out. Remember, these rates will settle down by 908. Sensex also showing a positive tick of over 100 points. But let's pull up Axis Bank. I guess that's the one which will be in focus, reacting to its numbers, which disappointed the street, I believe, or surprised the street, rather to say. Axis Bank in the pre-opening rates is showing a downtick of nearly 10%. Remember, once again, these numbers will settle down. I want to pull up Yes Bank also, a counter which rallied post its numbers by almost 9 to 10% yesterday, showing a downtick of almost 2%. Some results reaction will be in focus from the likes of Reliance India. You also had Biocon. All these companies, they came out with the numbers post-market as. So Reliance is showing a downtick of 1%. Biocon just about flat to positive, actually trading with gains of 3 to 4 rupees right now. But on Nifty, in the pre-opening rates, you've got on the gaining side something like Tata Steel. Z is showing a positive tick, and also Reliance Industries. Remember, that's the big one which comes out with its earnings today. Reliance Industries in the pre-opening rate is showing a tick of nearly 2%. Remember, Reliance has also been pretty active this week throughout. We've seen some good gains coming in for this one. Besides that, Maruti too is showing a positive tick ahead of the numbers, which they'll be coming out sometime in the afternoon around 1 to 1:30. Maruti up almost 152 rupees in the pre-opening rate.
Well, let's wait and watch what happens there. Here's some other stocks. I want to see, I mean, of course, Navneet has marked Axis Bank already, but the rates out there would change a little bit. I think important to note what Yes Bank could do, because with the 2% uptick that is showing right now, can it do more during the course of the day is the key question. Remember, it's a stock that's coming off a 8% rally in the last half an hour of trade yesterday. Jindal Stainless, I thought the numbers looked okay. It's showing an uptick and a very high uptick. Let's see if that lasts or no, but may not be a 13% uptick. Somehow the numbers looked okay. The rally seems to continue for Den Networks. It has sharp spike in late trade yesterday, seems to be continuing. And Astral Poly, if it clocks in the 5% gain, would be nudging those new highs yet again. So let's wait and watch if that happens or no. Essel Propack, the numbers left a bit to be desired. Let's see if the stock is reacting to these numbers. No, not really. What is reacting is Axis Bank, Bhushan Steel, Wakrangi, and maybe small pullback from stocks like DB Realty. They've had a good rally for the last couple of sessions. Let's see if that indeed does happen or no. You know, it's very difficult to get a chart check going on Axis Bank right now. Let the pre-open rate settle, and then we'll take a call there. But suffice to say, it will start off on a negative note. The key question is whether stocks like Yes Bank can continue the rally or no. Okay, before we move any further, a quick thought on the currency as well. Just a quick check out as to what the currency, the bond yields are doing. 66.78, so very flat. This is in line with what it closed yesterday. The bond yields should come up on your screen as well. And at 7.74, again, very, very flat. So no big moves on the macro cues, at least this early in the morning. However, what about brokerages? What have they made of some of the results that have come out, and maybe some initiating coverages, if any? Samit Sarkar is here with the top brokerage calls for the morning. Samit.
Good morning, Neeraj. On the big brokerage calls for the day, first we have a CLSA on Supreme Industries. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 1,557 from 1,482. Now, according to the brokerage, the fourth quarter of financial year 2018 was strong on the back of inventory gains, operating leverage benefits and strong volumes in the industrial business of the company. Now, the brokerage also says that the company's announcement of stake sale in the automotive component manufacturing space will boost the company's return on capital employed going forward. Along with this, the company has also received approvals for launch of composite cylinders which is expected to boost the company's revenue going forward, according to the brokerage. Now, the brokerage has raised its EPS estimates for FY19 and FY20 by 5 to 10% on the back of these positives that we have seen from the company. Second, we have is Investec on Colgate India. Now, the brokerage has maintained its buy rating on the stock but has raised the target price to 1,280 from 1,200. Now, according to the brokerage, the impact of Patanjali is coming off a bit and is expected to moderate going forward, led by the improved execution by Colgate in the Ayurveda category. Now, the brokerage also says that the disruption in the wholesale channel was temporary and the company's commentary indicate a recovery going forward. Lastly, the brokerage has increased the target price as they have rolled forward their targets to financial year 2020, and it expects the oral care segment to have a large potential going forward.
Okay, we'll watch out. Thanks a lot for that, Sumit. Good having you. Yogesh, before we let you go, if somebody had to bet on one investment idea right now from a, say, a 6-month to a 12-month perspective, if that's the time horizon really, not a long-term time horizon, what would you recommend?
For the safe side and the growth aspect, then certainly I would recommend HDFC Life for the investment perspective for anyone via SIP or via lump sum investment or whatever way. That company gonna be a very promising future. The penetration on the insurance sector is just minuscule in India, and at least will grow up by 50 to 100% in next 2-3 years. So even if somebody has a view of 1 year or more than that, one can definitely invest into this stock, and on decline also, if it goes down by 8-10% in unfavorable market condition, they can still hold on. With the embedded value of 200 to 210 on FY20 basis, it is still available at hardly 2.6 times embedded value. So if there is any premium on that with the credibility of the management and aggressive stance on the business growth, so, and it is the third largest, the top 3 companies into the market leader segment. So that we believe that this can grow very far from here. If anybody has a vision of 3 to 5 years, then also I would recommend this company to get into as an investment.
Neeraj, clearly higher valuations are not a concern for something like HDFC Life. Yogesh is not the one. We've got many analysts on the show who've been saying that one should hold on to this counter. Yogesh, I appreciate a lot you joining us today this morning and taking us through your views on the markets. I just want to pull up SRF. Remember, the counter had rallied in yesterday's session. It had a good run-up of nearly 6 to 7%. In the pre-opening rates, it's just showing a downtick of nearly 9 to 10 rupees. But let's do a technical check on this. Dharmesh, on the charts around the current levels, would you take any bet on SRF?
Yeah, definitely. If you look at the chart of the SRF, it has seen a sharp rally from 1850 to around 2200, I think so. We believe, I think so, the sharp run-up is more to moving the stock into the overbought conditions. So we are expecting, I think so, some bit of a cool-off in SRF. Definitely not the current levels, but definitely on the dips near 2100, I think so one should definitely look for SRF.
Interesting. 2312 and counting for SRF. Remember, it's a big day for results as well, and good time to get in Deven Choksey of KRChoksey Securities to join us on the show to talk about his thoughts on the markets and specific themes as well. Deven, so good having you. Very good morning. Thanks so much for joining in. It's been a great series, Deven, that we just left behind. Earnings picture seems to be improving. What have you guys at KRChoksey been telling your clients to do? Are you advising deployments of reasonably large sums of money if clients have that at the current levels?
Yep. Good morning, Neeraj. Yes, I think this fall gave a good opportunity, and we have been accumulating selective stocks as we talked about earlier also. The view is very clear that in this particular year, we are likely to see such kind of phases where the markets would have the yo-yo effect because of any such kind of global or local news which are continuing to flow in. So from that perspective, I think you will get an opportunity at a lower levels into buying into some of the select stocks. we believe that I think the fundamentals of the economy and the corporate sector's earning outlook, they both are extremely buoyant. They both are improving significantly. And as we see every quarter passing by, we get more and more visibility on various businesses, various companies, various sectors, where I think the situation is improving beyond I think the imagination levels of earlier times. So from that point of view, yes, I think it's an opportunity buying into select stocks. You have plenty of companies to talk about. Capital goods segments is roaring with the new order book. The automobile segment, I think, is talking about the newer vehicles, new volume growth. We have the plenty of other companies which are into the typical entertainment space, where I think the growth numbers are looking quite smart. So from every aspect, if you start looking at it, I think you have got the opportunity building around, and that's where I think you end up buying when this kind of a market gives you opportunity at lower levels.
Deven, so far actually the earnings season has not been bad, and today we've got Reliance Industries which comes out with its numbers, and you've been tracking this stock for quite a while now. What are the expectations from this one?
So I think the broader expectations would be, I think, somewhere around 1,08,500 crore worth of revenue, somewhere around 17,900 to 18,000 crore worth of EBITDA level profits, and somewhere around close to 9,900 to 10,000 crore worth of net profit, I think, is what is expected out of this particular quarter. Importantly, the refining cracks have been significantly higher for diesel and jet oil. So that is where I think the company could possibly take the advantage, along with the Basra crude, which they end up procuring at a significant discount. And fortunately, they could possibly sell their products, I think, in the last quarter at a premium, because they foresaw the kind of a price rise taking place into the petroleum products of the crude oil. So as a result of which, I think the company could possibly show relatively better numbers on the GRM side as well compared to the last quarter. Though on a conservative side, we would like to believe that it would have around 4.5 kind of a markup, delta markup over Singapore GRM of 7. So it should be somewhere around 11.5. I think 11.5, 11.6 kind of a GRM should be possible. And the surprising impact within the lot could be the Geo. Geo could possibly show for the first time in a quarter, I think, a profit close to between 900 to 1,000 crore at the bottom line level. So that, along with the retail, where we are seeing the traction, the growth happening for the company on a smart numbers, I think, are likely to come out on the retail side as well. So overall, Reliance port result, I think, should show distinct improvement in the times.
Okay, Chairman, stay on. So much more to talk about, but we just minutes away from market open. Time now to tell you all that you need to know, viewers, to stay ahead in trade today. Axis Bank is in focus after reporting its very first quarterly loss since listing. Top brokerages cut target as the March quarter NPAs rise to 6.77%.
Pharma major Biocon reports a 26% growth in its March quarter revenues, while EBITDA rises 24%.
It's a new order win for Thermax. The company wins an order for captive cogen of a power plant. The total order worth 279 crore rupees. The stock marginally higher in the pre-open session.
Well, another stock to watch out today will be Hawkins Cooker after Perenju Veliat's Equity Intelligence buys 1.6% stake in the company at 2,811 rupees per share.
The street will be watching out for Reliance, Maruti and UPL as the three nifty companies will be reporting their March quarter numbers today.
And Fortis Healthcare will have further discussions on its board restructuring today.
Okay, having said that, look at Essel Propack. That stock is revving up in the pre-open session. This has turned out very well. Bring up Essel Propack on the screen, 7.5% higher. And then bring up Yes Bank, 3.5% higher, 365 and counting. Really good going there. Dharmesh, for somebody who initiated longs into Yes Bank yesterday, with the levels of 365 on the cards already, what should be done?
I think one should hold the positions for the Yes Bank. As we look at the structure of the Yes Bank, it has given a faster retracement of the last leg of fall, which clearly indicating, I think so, the stock has a much move for higher side. We believe, I think so, 385 could be more likely target for the Yes Bank. So one can revise the stop loss, I would say, for the Yes Bank from, if one has taken a call at the lower side, I think so the stop loss revised stop loss should be around 345, 346, and the target should be around in the range of 385 to 390. So I think so one should hold the positions for Yes Bank.
Interesting. And you know, in moments from now, we'll talk with Deven Choksey about this whole banking dichotomy that we've seen as well and what to do with select names out there. But Yes Bank still certainly remains amongst the top draw. Now, interestingly, Reliance Industries is about 1.5% out of its numbers too.
Yep, that's right. In fact, stocks like Astral, Poly, Uflex, they've also risen nearly between 4 to 4.5% in the pre-opening rates. Dharmesh, I'm going to come back to you with regard to your top pick for the day after looking at the pre-opening rates. What would that be?
Top picks, I think, remains to be Tech Mahindra for the day. We believe, I think, so IT space will remain into the focus too, and where we believe, I think, so stock should move towards 710, 711 should be the target, keeping a stop loss of 689. So Tech Mahindra remains to be the top pick for the day.
Trading idea, Neeraj coming in on Tech Mahindra, and it'll be important to see how NIT Tech and Mindtree react today after a stellar run-up that we've seen in the last 2 or 3 sessions.
I probably took the shots to the cleaners as well, NIT Tech, but yeah, now need to put it right. So let's wait and watch what happens to some of the mid-cap IT names as well. But this is what the market is likely to do on open. About 1/3% higher is what the Nifty was suggesting. The Sensex was suggesting a very, very flat start. So let's wait and watch what turns out to be true. The Nifty Bank would be a key component. And not the heavyweights, but HGS versus Axis. An interesting tussle today. And then let's see what the heavyweights do, and in turn, what the Nifty Bank does the first day of the new series. Expect volumes to be very muted in today's session. This is how we've started off. About 1/3% for the Nifty, interestingly. Sensex just about 1/4%, now about 1/3% to the Nifty Bank. Opposing forces at play, and therefore not moving too much. I would reckon the mid caps and the small caps would be about 1/4% or thereabouts. Actually, no, 1/3% for the mid caps, small caps up about 0.5%. It's actually a good start. Let's bring up the heat map and let's see. The Nifty right now is 0.5% higher, so there is strength there. Courtesy Reliance Industries being up 2%. Maruti being up about 1%, and Yes Bank, look at that boy, 4.5% higher now after an intraday move of about 10% in trade yesterday, close of about 8%. This one continues to rise and shine. So clearly the market's finding no fault with what the numbers have shown, or even if there's a fault too, very minor in nature. On the flip side, Axis doesn't react as much. In fact, for the second day in a row, Bharti Airtel is the top loser, down about 1.5% at the start. Let's see what this does. Wipro continues to grind lower, so loses another 1.5%. It actually recovered a bit of lost ground yesterday, but now again continues to go. But a lot of green, not enough red. It's not a bad start at all. Reliance only aiding the sentiment. Let's see if ahead of the numbers with Reliance moving how it is, whether the numbers turn out to be much better than what the street is working with. However, before I hand it over to Navneet for the entire broader market action, just 2 or 3 pockets to watch out for. I thought the numbers of Essel Propack, at least reportedly, were bad, but the market thinks otherwise, 5.5% higher. But Rallis and Axel Yakale certainly doing justice to the quarter, not the best of quarters, and they've corrected. What else? There are individual stocks. Shriram City Union Finance was a mixed bag and 3% down. Nikki was speaking about how there were asset quality issues that we saw in Shriram City Union, and that stock starting off on a weak note. I just want to mark mid-cap IT and a couple of other pockets because they were trading close to new highs. Scient continues to rise, and IT Tech continues to rise. Mindtree just taking a bit of a breather in the first few minutes. Navneet, what are you spotting?
Neeraj, it's clearly a good start this Friday morning, and a couple of results reaction. I want to pull up Biocon. Remember, we highlighted this counter for you where the EBITDA for the quarter went up by almost 24%. Not reacting too much to its earnings, but still it is in the positive territory. SBI Life Insurance, that one too came out with the numbers yesterday, and we've seen good set of numbers coming in from majority of the life insurance companies, but SBI Life is seeing some bit of selling pressure. That's down 1% at least in the morning session. Besides that, something like AU Small Finance Bank, where the net interest income was up nearly 30%, profits went up by 6%. That's not reacting too much to its earnings. Pull up Rallis India as well. That one came out with its numbers where the margin deterioration was seen during the quarter, and clearly 4% downtick for Rallis India. Jindal Stainless, margin expansion seen for the March quarter. Let's see how that one is reacting to the numbers. Jindal Stainless is seeing an uptick of nearly 2%, and IEX index. Remember that one will be in focus. Margins at 78% versus 69% that was seen in the corresponding quarter. Not reacting too much. However, lastly, just another result reaction. I want to pull up Tata Metallics, where revenues were up nearly 36% for the quarter. Well, besides that, even if you look at the broader markets, there are a lot of stocks reacting on the upside this morning. Look at something like Uflex. If you could just pull up that counter, it was showing an uptick in the opening session at least. But other than that, you've got a lot of stocks from the Nifty 500 index which are reacting this morning. I want to pull up Nalco as well. Remember, after seeing some bit of correction, the aluminum prices had fallen in the global markets. This counter has bounced back. Yesterday also it was up. Today also it's seen gains of 2 to 2.5%. Media stocks like Hathway and Den Networks, which did pretty well in yesterday's trade. Hathway is showing an uptick of nearly 2% right now. And let's pull up Den Networks as well. So the rally definitely continues for these media stocks that's trading with gains of nearly 3%. Neeraj.
Yeah, and you know, one stock that continues to rise and shine is Pioneer Distilleries. 7.5 or 8% higher at 282. This is trading at new highs. Look at the last 1 week chart for Pioneer Distilleries. It's just done remarkably well. Gravita India 4.5% higher, but the big boy Reliance Industries and then Jubilant FoodWorks amongst others at new highs too at 2552. Jubilant FoodWorks is packing a serious punch in today's trade. But more gainers than losers. Axis Bank is up 3%. It's now the top gainer on the Nifty. So, well, surprise, surprise. Deven, Choksey, what's happening here?
Yeah, Neeraj, I think largely the people anticipated that I think there will be a quarterly loss on the provisioning aspects. And I think the subsequent quarters probably may not see the similar kind of a pain as far as I think the provision is concerned. So from that perspective, I think people are buying on the announcement of the news, and the short covering led buying can also take place. As I see it, I think another trigger point could be that the market is expecting change in the management to be positive, and that could possibly lead to the re-rating of the stocks eventually, though I think nothing on horizon as far as next 1-2 quarters concerned, but certainly I think that could keep the market busy with the expectations. As of now, we believe that I think they are beaten down. Valuation wise, I think the corrections have helped them to I think come up at a level at which it becomes a little attractive. The choice, if I have to select one out of the two between the two banks which came up with result yesterday, Yes and Axis, would stay with Yes Bank because of the larger amount of loan book growth that they have been producing and continue to show I think close to 30% kind of a growth in that area. So that is one important aspect. We like to stay with the companies which are running at 30% kind of an engine, which is producing far decent clarity for the growth eventually. So we prefer Yes vis-a-vis Axis for the time being.
Wow. Deven, just stay on. Just want to take one final thought and then continue our conversation with you. One final thought from Dharmesh Shah as well. Dharmesh, top 3 Nifty names. I just want a view from you on if you have on any of these. Axis and the surprise move out there. Yes Bank and the continuation of move which we already spoke about. And Reliance Industries which is up and now nudging the 1,000 mark.
Definitely, I think so. Reliance remains to be our top pick for the day, as well as positionally too. We are already recommended Reliance Industries at 940, but I think so the Reliance remains to be the uptrending, as it's today broken the major level of 990. So I think the 1040, 1050 more likely target for Reliance. Coming to Axis Bank, I think so major negative news seems to be getting priced in the stock, and 475, 480 remains to be the very strong support for the Axis Bank, and we expect this support to hold. So going forward, I think so more of a consolidation to base formation should be expected in Axis Bank going forward. So definitely all the 3 stocks which we already taken, I think so remains to be the positive in the Nifty going forward too.
Okay, we'll leave it at that. Dharmesh, thanks so much for taking the time out and joining us and giving us that perspective. Axis Bank, Yes Bank, ICICI Bank, Bank Nifty seems to be revving up in trade. That aside, Adani Ports has come back to about the 400 level, so good going out there as well. A few other pockets of strength today before we take in the final questions with Deven Choksey include Den Networks, include Equitas Holdings and Jindal Stainless as well. Deven, while we're talking about banks, What about the microfinance and the SFB space? Do you believe there is a business case here, keeping in mind the valuations that they are trading at? Because both Ujjivan and Equitas in particular have not recovered from the battering that they have taken. I mean, maybe marginal upticks here and there, but nothing too dramatic.
Well, Neeraj, I think the view on the business front is that you have the microfinance business which has penetrated into the rural areas and have acquired the customers. However, I think for them to sustain this kind of a activity, probably they will have to go mass scale onto the technology drive, because very fast I think the some of the new technologies have actually started reaching out to the masses on a digital platform, and that includes success of Kotak's 811 scheme. My own take is that I think the microfinance companies will have to eventually, I think, create a model where they are in a position to lend at a competitive rate and at the same time acquire the customer by using the technology drive. My reading says that I think they are expensively traded. Vis-a-vis that, if I have to look at the trade happening in other areas, say for example select pockets in NBFC like consumer finance, or for that matter the housing finance, where we see the larger thrust continuing of around 25-30% kind of a credit offtake growth, I think that the balance sheet size of some of the companies like Bajaj Finance, Capital First, LIC Housing Finance, HDFCs, even housing finance businesses of SBI and other banks, I feel that I think overall the housing finance and the consumer finance is showing relatively better growth in this particular space, and that's where I think we would like to see our investment going into that, because expensively valued the microfinance companies vis-a-vis the other option looks, I think, relatively more solid. I think so. That is where I think we keep our focus on and add these stocks into the portfolios.
Well, Den Networks, Neeraj, is now up nearly 6 to 7% in trade after surging in yesterday's session. Also, you've got something like Indoco Remedies that's bounced back. Remember, yesterday there was news that it received a statement of GMP for non-compliance from UK MHRA. But some bit of relief seen, at least in terms of the stock price movement today. Indoco Remedies is up 3.5%. The way Neeraj was talking about Den Networks as well, any views on the media space or any top pick in that sector?
Yeah, Navneet, we were very strong on the content side of the media play, where we believe that I think if you look at the overall content providers in the Indian media industry, I think the total market cap cumulatively of I think all the listed companies practically remains, I think, at a significantly amount of low valuation. And as we see the proliferation of OTT and the VOD kind of a platform moving ahead with the likes of Amazon Prime, Netflix, or even for that matter homegrown Jio, and even some of the companies like Hotstar, Voot, or some other players, we believe that ultimately the content would be the king in this entire proposition, and those who could pipe this content into the front end, say for example Jio kind of a framework, wherein I think you plug in those contents and distribute it easily, I think, on the handheld devices. This could probably be the new money spinner game as far as I think the business is concerned, and that's where within the media entertainment space I think we continue to like this pipe model, wherein I think the front end would be the ISP or the telcos and the back end would be the content providers. I think that could possibly show a relatively smarter growth, and maybe I think non-linear growth in some of the cases, as I want to call it, at least for the near 2-3 years time. So that's where we remain bullish, and we believe that I think the valuation will eventually catch up on this particular side.
Okay, Deven, we'll leave it at that note. Appreciate you joining us today and taking us through your thoughts on the markets, and have a good weekend.
Thank you.
Well, just looking at the market, something like GKW Limited, this counter was locked in upper circuit in yesterday's trade with gains of 20%, and just in the morning session the buying momentum continues. It's a small cap company which manufactures fasteners, electrical stampings. That's what the Bloomberg terminal is throwing about. But the other company which is doing well is JM Financial. I remember this one too went up in yesterday's session, and the buying momentum for JM Financial continues. Currently trades somewhere around that range of 4.5 to 5% gains. Besides that, we've discussed Equitas Holdings, which continues to hold on to its gain, and DCM Shriram. Remember that one came up with bad set of numbers. In the last 2 trading sessions, DCM has lost nearly 30%. So some bit of relief, some bounce back coming in today's trade for DCM Shriram. I also want to pull up the India Volatility Index, considering today's day 1 of the new series. So that one remains in focus, because so far the VIX has remained at elevated levels, but definitely something around 12.5 will be a big relief for the bulls.
Okay, well, that's what's happening on the bourses. I think Navneet summed up almost everything. I just want to mark the nifty losers. Bharti Airtel falls about 1.5%, so that one is corrected. And IT is taking a bit of a backseat today. So Wipro, TCS and Tech Mahindra, all 3 of them have all corrected in the session today. The HDFC Twins too, marginally off in trade, but it's a day that it's a morning at least that belongs to the gainers. Fairly brisk start, day 1 of the new series. Bhushan Steel continues to lose on the mid-cap end of the market, as does PC Jewelers, and Gati corrects a little bit from the levels that it was taking at. Navneet was talking about NIT Tech. That one is down about 2.5%. But let's slip into a break then. On the other side of the break, we get 2 important voices. One is, of course, Mark Matthews, who will talk about the yields northwards of 3%, crude doing what it is doing, and what does it mean for India. And Essel Propack is that mid-cap stock which has gained tremendously. We decode the company's earnings with the chairman, Mr. Ashok Goel.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth platform from India's largest stock exchange.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Well, thanks for tuning into this special conversation on Bloomberg Quint. The US yields, the bond yields have touched the 3% mark. There's a lot of geopolitical news flow which is impacting crude, which is impacting the dollar, and the resultant impact on emerging markets as well. So lots to talk about with our very special guest. Mark Matthews, needs no introduction, joins us right now on the show. Mark, good having you. Thanks so much for joining in. Starting off with the big elephant in the room, 3% is here, and it's looking like it's not resulting in some bit of buying into the bond markets as a result of the yields moving up to those levels as well. What's next? Everybody was predicting a doomsday scenario when this event finally happens. What's your prediction over the next 6 months?
I don't see why it should be a doomsday prediction. I mean, for the vast majority of the history of the 10-year Treasury yield, it has been much higher than 3%, like around twice as high on average. So 3% is still, I think, not a lot of money when you just sit back and think about it. Would you be satisfied with a 3% return per year? Maybe for 1 year you would, but for 10 years, you'd probably, want to look for things that give you a higher return. So I think after we digest this number, because it is a psychologically significant number, we will get used to it, and life will go on, and we'll realize that it's not such a big deal. Typically, where stocks get impacted by the Treasury yield going above a certain level is actually not till you get to about 5 or 6%.
Interesting, Mark, you say that. So there are two ways to look at it. One would be what happens to the US stocks, and arguably the whole conversation about how the tax breaks definitely come back and help the US corporations mitigate some of the borrowing costs that may have risen as a result of the yields moving up. But two, the impact on flows out of other markets back to the US because of the rising yield. How does that situation look like now, where we are at 3%, or over the next 6 months where we may be 3%, we may be 3.5%, or we may be lower than 3%?
If you look at the various government bond yields in the world, in fact, there's no other developed economy that has a higher bond yield than the United States. It's 3%. And I think New Zealand's the next highest at 2.9 something. So I do think that, it's a wide spread that could entice some money into dollars, but would people go out of their way to buy 3% versus, 2% in Singapore or Canada, and then put it in the stock market? I don't think so. So I think we're talking about two different kinds of money, bond money and then stock money. And the money that goes into stocks, which is obviously willing to tolerate a higher amount of risk, I think it will still continue to flow into other places in the world because, number one, the U.S. has done phenomenally better than anywhere else in the world, so it's quite expensive. Even though there are the tax cuts, it's still much more expensive than Europe or most places in Asia. And number two, we have to remember the story isn't just about the United States, particularly with the rise of the Chinese economy over the last decade. China was a $3 trillion economy 10 years ago. It's around a $13 trillion economy now. So it has a big impact as well. And it's doing quite well. So that is very supportive for Asian markets, almost all of which China's the #1 trading partner now.
Interesting. Interesting you say that, Mark. I'm just using India as an example here, but maybe the case has been for some of the other emerging markets as well. It's not been a particularly good year for flows. Calendar year 18 has not been particularly good for flows. In fact, if anything, on almost every alternate month until date, we've had reasonably strong outflows out of India at least, and a clutch of other markets too. What would you attribute this to? I mean, would this be because the markets are looking slightly expensive on a case-to-case basis, or is it a general shift towards developed markets because even those are showing growth?
Well, having said Asia is singular, in fact, it is not. And India is very different from the rest. I do think India is in its own orbit. Number one, because it's so big, so it is much larger than any other market outside of, it's much larger than the Southeast Asian markets, for example. And the domestic economy there is really what drives the market. And so the economy is less subject to the vagaries of what goes on with exports and imports in other parts of the world. Having said that, you wanted to know why foreigners have been selling. I don't exactly know the answer to that. They were net sellers throughout the second half of last year, so it's really a continuation of a trend that was been in place for some time. I don't know why they were selling last year, because we liked the Indian market last year, and we still like it now. But I know this year they've soured on it somewhat, and I think the twin drivers are the rise in the oil price and the knock-on effect that will have in terms of the government having to cover the oil marketing companies if they fall into loss. Number two, politics, especially after the Gujarat election, starting to question the BJP's ability to pull off a victory of the same magnitude that they did in 2012 in 2019.
Okay, I'm going to come to that in a bit, Mark. Just one word on what's happened recently on the currency front as well. We've seen significant dollar strength. The last 1 month, the Indian rupee arguably has been one of the weakest performers in the Asian market or the emerging market pack as well. What's happening here, and do you think the trend of a strength in a dollar vis-a-vis a clutch of other currencies is likely to continue?
Our feeling on the dollar is fairly agnostic. We don't have a strong conviction on any of the major currency crosses right now. But I would go back to what I said earlier, that 3% is much higher than you're getting in any other developed economy apart from New Zealand. So the dollar, I think, is well supported by that yield. On the other hand, will it really go rocketing higher? I'm not sure about that either. So with regard to the rupee specifically, what's changed is the minutes of the RBI's meeting showing a more hawkish tilt, and so greater likelihood of rate hikes in India in the second half of this year should help support the rupee, as well as the higher yields in the bond market. Foreigners have been selling them, and I don't expect them to come rushing back, but the more yields go up in India, certainly the more attractive it looks.
Interesting, and yeah, interesting you make that point that despite the yields moving up the way they have, we haven't particularly seen inflows coming in a big way. The limits have been opened up ever so minutely as well. Just one more global question before I move full tilt to India, Mark, and that's on the commodity pack as well. Crude has risen quite considerably with all that's happening on the geopolitical front as well. The talk of US, Iran, and the conversations thereof coming off or pulling out of the deal. What do you think happens to that elephant in the room?
Yeah, I wish I could find something exciting to say, but it's pretty much the same as the dollar. We're agnostic. So we are neutral on oil, which I must admit is a change. We now are looking for about $65 on the barrel. And I think there are three factors at work. The first is one you alluded to, which is Iran. Iran has pumped about 1 million more barrels per day since they lifted the sanctions. And of course, recently there's been a lot of talk that the sanctions would be reimposed as Trump clearly has taken a much more aggressive stance on Iran than Obama. But Macron, having just left Washington, now it sounds like Trump may not. So that's a bit of a wild card. Number two, we are seeing very good discipline on the part of OPEC and Russia in their production cuts. And I don't see that changing. And number three is the inventories in the developed countries have basically come back to zero. Putting it all together and adding on pretty decent global growth, I don't see why the oil price should collapse. But as I said, we're not looking for it to go much higher either. So we're looking for it to flatline around here.
Interesting. I heard you mention that you are reasonably bullish on India. You liked India then in late 2017. You like India right now. There is this problem of the twin deficits. We've seen crude do what it does and the resultant impact that it has on the Indian economy as well, as is probably evident in the way the rupee and the bond yields have performed too. What makes you bullish on India, Mark?
Well, it's the bunch of things. I mean, number one is just the long-term structural story of the large and relatively young population, and that's well known, so we don't need to go into that. Number two is the reforms, and I do think that I don't live there, but I've heard plenty of stories about how there have been a lot of execution problems and hiccups in the reforms, but you can't deny that they're there and they're happening and they are having a positive impact. And I think they will continue. I think that people vote differently on a state level than they do on a federal level, Delhi being an excellent case in point with the AAP party. So I'm not too worried about next year's election, even if BJP wins slightly less than in 2012. I think they'll continue to push through the reforms, and that's a good thing. And then the last thing is that the earnings are very robust this year. And I think since 2014, the consensus has been continually coming in too high. But what we're seeing in the most recent results is that the consensus is basically the actual results are meeting expectations. So it'd be nice if they were beating them. They're not beating them, but they're coming in line for the first time, as I said, in 4 years. And we are looking at growth in earnings in the high teens this year. So those are factors that I think. One last thing I might throw in is that you still have very strong domestic fund flow. Probably about a third or a half of that is SIP funds, which are sticky. They will continue to put money in the market regardless. So I think there are enough positives actually to outweigh the negatives that we discussed earlier, and therefore I wouldn't want to get too bearish on it.
No. That's music to the ears. Mark Matthews, many thanks for joining us today and speaking to us at Bloomberg Quint. Well, that's the move from Mark Matthews as of yesterday. So very recent, bullish on India. Reason to be today, bullish on India. Banks are doing extremely well. Axis Bank is up 4.5. It's revved up sentiment across. So Yes Bank is not amongst the top gainers, I must say. ICICI Bank, State Bank of India are amongst the other stocks which are doing well. Yes Bank is far lower. It's just up about 1% or less than 1%. The others have come to the fore now and counting. First, let me get in Shraddha Babla from our research desk to talk about this very curious piece of movement that has happened out here. Shraddha, in the morning as well, when we were looking at the brokerage notes, most people retained their calls, yes, but everybody spoke about how the results were disappointing. Not too many people would have anticipated a 5% up on Axis this morning.
Definitely not. This does take all of us by surprise, Neeraj. But like I was talking, I think one of the possible reasons could be the fact that on the capital adequacy front, there are no concerns as far as Axis Bank is concerned. You know, if you compare it vis-a-vis what an impact of such big recognition would have had on, say, PSU banks. Second of all, with respect to valuations, none of the analysts that we spoke to actually said that Axis Bank trades at a premium valuation. They're more or less 1.7, 1.8 times forward earnings does not really seem too steep. So probably valuation is also one factor. The third bit could be that everybody starts to look at forward earnings, and while FY18 could have taken a big hit, FY19 and FY20 numbers will look much better because all these provisioning has already been stress recognition and provisioning has been factored into FY18 numbers that has shown on the book. So a lot of brokerages and analysts do believe that that balance sheet cleanup now has actually started happening. There was a lot of uncertainty with respect to the new NPL formation and recognition. The management also yesterday reiterated that that NPA recognition is over. That could probably be the reason that the markets are choosing to focus on what lies going ahead.
Shraddha, stay on. You might want to have a question or two with Siddharth Purohit. He's research analyst at SMC Institutional Equities. Joins us on the show as well. Siddharth, thanks so much for taking the time out and joining us on a short notice. What's led to this move in Axis? In the morning, nobody anticipated this. Or did you?
Yeah, in fact, I also expected a kind of soft opening, maybe little negative, which happened initially, but subsequently there has been a strong amount of buying in the stock. And the reason I believe is that the bank has clearly taken a bold step cleaning up the balance sheet, and the large amount of slippages that we saw during this quarter, almost 16,500 crores of slippages. Most of that has come from the known sources, the watch list, or maybe from the low-rated corporates. So that leads to a clarity that, most of the pain has been recognized during this quarter. While the management also has given a clarity that, possibly 2 more quarters, maybe there will be some more slippages. But I think that is well taken, because I think given the current capital adequacy, they are adequately having the capital to take any further slippages if at all comes. And now, another thing is that, while there has been large slippages and recognition of NPA during this quarter, the management looked very confident and also has gone ahead and said that, their credit cost would start normalizing from second half of FY19. And that's a kind of very positive, I would say, step towards normalizing the credit cost. And FY20 looks much stronger for the bank, and I think that is one of the reasons why the stock is reacting very positively in the market today.
Interesting. I'm sure Shraddha has more questions, but Siddharth, just one quick thing. The fresh stress loan formation has stayed high. That is not a worry too. I mean, while the bank has said that things might be coming close to an end, they have reiterated this a number of times in the past. What gives the market the confidence this time around?
The fact is that when they came out first with regards to that watch list and other stress asset pool, it used to be somewhere close to, if you look at their disclosure, it used to be more than 22,000 crore, and other stress combinedly used to be 30,000 crore. So now that pool has substantially gone down to almost close to 9,000 crores right now, which forms just 1.8% of their asset now. And if you add to that SMA accounts also, which forms just 0.5%. So combinedly, these two accounts will account for just 2.3% of the outstanding loan book for the bank, which is very low compared to what historically they had been reporting. So that gives a very much, I would say, a clarity that not much of pain is left. Largely, it has been recognized. And I would say that there is much predictability in terms of asset recognition and NPA right now compared to what it used to be a couple of quarters back. And that is what market is recognizing right now. So I would go with a view that, a large part of the trouble is over for the bank. And that's why I have a positive stand on the bank.
Siddharth, good morning. This is Shraddha here. I understand what you have spoken about, the recognition that has already taken place and the fact that a lot of these slippages in the fourth quarter came in from known sources. But just I just want to understand why are markets choosing to ignore the fact that over the next 2 or 3 quarters, you will also have the BB and below rated book, which will actually slip into NPL. So is the street choosing to ignore what we are likely to see over the next 2-3 quarters and just talking about FY20 numbers? Is that the kind of reason for this kind of reaction that we are seeing?
See, when you talk about the low-rated corporates for the bank, there has been almost 7,000 crores of reduction in that. The watch list has almost kind of ceased to exist now. There has been almost close to 5,000 crores of fall from that itself. Now, all the restricted accounts, barely 1,000 crores is left for recognizing as NPA, if at all, from that. So all the trouble that was kind of, was all highlighted in the previous call. So those sorts of accounts has been kind of, recognized by the management during this quarter, partly because of the regulatory thing that happened during February, RBI taking a bold step, that all those accounts should be taken as NPA. So now that gives a clarity that, further there won't be restructuring sort of things. Either it has to be kind of, fresh NPA or it has to be kind of, proper resolution. Now, on top of that, if you look at from the resolution of some of the IBC accounts, the bank is fairly comfortable on that. There is no incremental provisions which might come up. Rather, I would expect that there will be some recovery out of that. So the credit cost, which is I would say the prime point what one should watch out, should start normalizing. While the management also has said that possibly 1 or 2 quarters there will be slippages, probably they are highlighting that this low-rated corporates could slip into NPA, which is a kind of a known fact right now. So when you compare 2-3 quarters back or maybe a year back, that pool was very high, and there was a fear that probably there will be more addition to those pool, but now that fear has subsided, and that is one of the factor of what is kind of driving the
point taken, Siddharth. Point taken, Siddharth. So do you agree with the management view that they'll be able to post ROEs of about 18% over the next 2 years, and also want your view on what the valuations for the bank currently look like?
18% ROE is something little looks on a higher side, but I believe that it will be in kind of higher double digit it is possible. And given the fact that they have strong capital adequacy, so they will not need capital as of now. So there is no ROE dilution also. Now, most of this, since NPA has been recognized during this quarter, a lot of interest reversal also has happened. And with lower slippages going ahead, reversal will also come down and NIMs will start improving. So there is a strong case for ROE rebounding. Now, when it comes to valuations also, if you look at now at the current level, based on FY20 number, the stock is trading at 1.8 times adjusted book, which is kind of now lower end of their historical valuations. And that gives a very strong cushion to the stock. And that's why I have a positive view. So I believe that large part of the pain is over, and there's a much clarity on the book for the bank, and that is what market is excited about.
All right, Siddharth, thank you very much for joining us with your view and perspective on what's happening with Axis Bank. In fact, we also have Manish Oswal, Senior Research Analyst from Nimbang Securities, who's joining us. Good morning, Manish. I just wanted your thoughts on what's happening with Axis Bank, a very contrary reaction that we are seeing. How did you see the Axis Bank numbers, and how do the valuations look currently based on the outlook for FY19, FY20 that everybody has started factoring in?
Yeah, so first of all, the Axis Bank result is below expectation, and even our numbers was much higher than what they reported. But what market is factoring is, one is, if you look at the relative valuation of Axis Bank vis-a-vis other corporate bank or PSU counterparts. Now, Axis Bank, the problem is Axis Bank is they have recognized 16,000 crores of NPA. Their total vulnerable book, now it is 9,000 crores of, which is 1.8% of customer assets. So if you look at the incremental NPA for FY19, it will be significantly lower than this number, obviously. And the second point is, if you look at the relative valuation, which is 1.7 times of FY20 adjusted book value, in that case, you are getting a bank which is, and secondly, on relative terms, when the Yes Bank, other people are quoting it 3 times or 2.7 times FY20, then the 480, 485 is a valuation support for the stock also. So if somebody wants to bottom fishing at these levels, and that is the way the stock is reacting to my mind.
All right, Manish, thank you very much for joining us with your views on Axis Bank. So, Neeraj, that's the call coming in. People trying to focus on the FY19 numbers, and the whole cheer is coming on the back of the balance sheet cleanup that everybody's choosing to focus on.
Yeah, I think Shraddha made this point in the morning, but interesting. Not too many people anticipate the stock to do that. Now, the second stock, which is doing really well and leading to the index doing what it is doing. By the way, the Nifty Bank is 1.2% higher, but the second stock which is doing so and doing well is Reliance Industries, now northwards of the 1,000 mark. So, Amit, we've spoken about the results preview, but just wondering, are the numbers expected to be so good that Reliance is having this rally, not just today, I think in the last 14 days, it's been one big gainer.
Well, if you see on the bottom line front, the net profit is expected to rise close to 6%, and this will be the 8th consecutive quarter where the company will be able to do so. One more fact is that for the last 8 quarters, the net profit has been ahead of the analyst estimates on a continuous basis. So, Street might be expecting that in this quarter also it could come ahead of the analyst expectations. But on the refining business, there's the core business and the standalone part of Reliance Industries that is expected to be a bit muted. But the petchem segment, which has been the star for the last few quarters, is expected to again report a good set of numbers in the 4th quarter of financial year 2018. Now, this will be mainly on the back of higher spreads, strong volume growth, and because of ramping up of the new capacities. Now the new capacities as the refinery off-gas cracker and the paraxylene unit, that is because of this units, the volume growth is also expected to be strong for Reliance Industries. The E&P segment, if you see, that is expected to report a higher loss this quarter because of lower volumes, but marginal part of this losses will be offset because of higher gas and crude oil prices that we had seen in the fourth quarter. Now, important part is Reliance Jio. Reliance Jio numbers are expected to be good in the telecom pack. Now, the numbers are expected to be the best in the telecom sector for Reliance Jio. Revenue is expected to be up to close to around 6-7 odd%, and this is mainly because of the strong subscriber addition that we have seen in the last quarter. In the month of Jan and Feb, the company was able to add close to 1.5 crore subscribers, and in the March numbers also are expected to be good. That we'll see when the results come out. And if you see, the Prime membership fees is expected to contribute much higher in this quarter, because of which we are going to see a jump in the revenue. On the net profit front of Reliance Jio, it is expected to rise by around 16% to 584 crore rupees in the fourth quarter of financial year 2018. However, the ARPU, that is the average revenue per user, that is expected to decline, but that is on the expected lines because the company had cut the tariff plans in the start of the quarter. So nothing surprise on the ARPU front, but overall the numbers are expected to be good for Reliance Jio also.
Thanks a lot for that, Sumit. Well, with that, it's a wrap on this leg of Indian Open. The Nifty Bank is revving the markets higher. Reliance is helping, and therefore we are currently trading at the highest point of the day, both for the Nifty Bank as well as for the Sensex, which is northwards of 35,000 now. Look at that number. Sensex is above 35,000. Thanks so much for watching this leg of Indian Open. Up next is the FNO show. Stay tuned to Bloomberg Quinn Live.
Sorry, I'm late. क्या हुआ?
कुछ नहीं यार. Just working on my expansion plan.